G'day folks, welcome back to another update for Bitcoin. Now we're doing a quick update after last Friday's report on Bitcoin. We did say it's taken a dump, but do watch for the bounce. Well, surprise, surprise, it actually has bounced. So let's look at the chart and see where it's gone from our last video. So as always, we look at the long-term trends, and for those new to the channel, we look at the monthly, the weekly, and the daily chart trends. And for each of these, we've got these moving averages on the price chart, but also the CCI 150 moving averages on the bottom down here. And these are available in the description below if you want to learn how to draw those on your charts. So on the monthly, the price has been bullish since around October 2023, well above the moving averages. Notice also the CCI has been predominantly bullish, although we did have a bit of a dip here between July 24 and October 24, and that was due to this consolidation period in that period of the price movement. But at the moment, still bullish, although the CCI has actually broken into that moving average range ever so slightly, so giving us a somewhat neutral positioning on the CCI, so just be cautious. On the weekly, you'll notice here we did, the CCI is already broken below the moving average range, and the price is actually is currently in that moving average of the price chart. But notice as well, we did have this bearish divergence, lower highs on the CCI versus slightly higher highs on the price. And that actually broke down and hit our minimum target. And this is the Fibonacci range. And it's at 23-38% Fibonacci. As a minimum, more than 90% of the time it hits this range. Sometimes it just bounces out, other times it breaks right through it. And you can see what it's done there. It's actually broken right through, and it's gone as low as the 50% with that wick of that candle. And then it's bounced, and it's been in that range currently in that week. But at the moment, notice the CCI is still below the moving averages, so showing a bearish or a weakening signal. Now, if we go to the daily chart, that's the weekly chart. If we go to the daily chart, similarly, you'll notice here the price has bounced off this resistance at 108.263 twice, almost 3 times there. And currently, the CCI and the price broke below their moving averages. But notice currently on the daily, because of that bounce after the weekend, it's actually a nice big bullish candle broken into that moving average range on both the price and into that moving average of the CCI. But notice so far today we've got a small bearish candle, so we might see a decline. We'll wait for it to see where it's going to break above that CCI moving average or below, giving us a bullish or a bearish signal. But at the moment it's neutral, so hold off trading on this if you're looking at buying. And remember the golden rule when you're looking at investing or buying or trading, we always go in a direction of the higher time frame. So if you're trading on the daily, we go in direction of the weekly and so on. But at the moment, the daily is giving us a neutral signal. And what that means is if we go to the intraday chart, this is the 1 hour chart, we use the daily as a reference. And you can see here the daily, we did have this bearish divergence as well. Lower highs on the CCI versus higher highs on the price broke, hit that minimum 23-38% retrace. So if we draw a Fibonacci, and again, these Fibonacci's are available on most charting software, it's hit that minimum range 23-38% level, and it's bounced out of there. And then it currently broke down and bounced off that 50% level. And that's where we were on our last video. And since then, it's bounced up, as I said, on the daily. Now, notice is here on we did project this bullish divergence, higher lows on the CCI versus lower lows on the price. That was our minimum retrace, the 23-38% Fibonacci. It broke right through that. It sort of stabilized there for a few hours. Then it finally spiked up and broke higher beyond the 61%. Now that 61% is key. We may see further upside possibly, but notice the CCI is broken into that moving average range, giving us a neutral signal. So at the moment on the daily and on the hourly, we've got neutral positioning. So just avoid going long or short until we see a more substantial move, especially on the daily. Now, in terms of, again, for those new to the channel, during this period when it's declining, going bearish on both the price and the CCI, we take short trades only. So that would have been from around the 27th of January. So if we go back to the 27th of January, you would have taken some of these short trades. So let's go back to this period here. So from the 27th on the daily, it was bearish. And that was back here. You'll notice here the CCI broke below the moving average of the CCI, but also below the moving average of the price chart. Let me just zoom in a bit. So you would have gone short. In other words, you would have sold at that point there on that candle. And let me just draw a measuring tool. And I prefer to close out the trade when the CCI breaks into that moving average range at that point right there. So you would have got out at the close of that candle. This is a 1 hour chart. So in 14 hours of trade, you would have made 5.58% return on that little trade there. Avoid going long during this period, because remember, we're going short during this period on the daily, and the next trade you would have taken would have been when the CCI breaks below the moving average, but also the price. Now that would have been a false break. You could have got in there, but notice that it was a green candle, so you would have got in at the close of that one, and you would have got out there with a small, that would have been a loss. So you take small losses where you take them. Now I prefer to close out these when the price breaks above the top of the moving average range. So you would have got out there somewhere. That would have been a loss. Another false break there. And then more recently, you would have had another break below there. That would have been another small gain there. And then more recently at that point there, and got out there. Another small gain there. Got in again there. The CCI breaks below. Write it out. Now that would have been a small gain on that one. Gone short again there. So you would have taken a few entries there and a few gains. Now notice the CCI is very volatile. It does actually touch that moving average range a few times. You can actually choose to close it out when the price breaks above the moving average range, and in that case you would have stayed in that trade a lot longer, and you would have got out at that point there. So had you got in at that point there, you would have got out when the price broke through that moving average range there. So that would return 5.87. I prefer to take these smaller trades when the CCI breaks in and out of that moving average range, because that gives you generally better returns. Sometimes the price gives you, so it depends on your trading strategy. If you want to get in and out more often, or if you want to hold on for a longer period of time. Obviously you need to watch these during that. And it's the same principle applies. If you're trading on the daily, you want to go in direction of the weekly if you're trading on the daily. So again, where are we now? At the moment, this CCI is broken into that moving average range. It was bullish, although don't go long until we see this break above on the daily. So again, hold off until we see the daily break either higher or breaks lower to go short again. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.